welcome back to Dukascopy TV. I'm Darren McDermott. I have Bruno Estier in the studio with me today to review some calls he made about commodities a month ago. Bruno, welcome.
Good morning, Doreen.
Good morning. So first of all, what chart would you like to start off with?
Well, let's review a chart a month ago about first agriculturals. We have here a few different information. First of all, on the top part of the chart, the black line is the US dollar index, and the orange line is the CRB, which is a composite index of all commodities. On the lower part, we have this US agricultural total return index. And basically what we highlighted a month ago is the fact that we were coming to this horizontal line, which is a pivot line. It acts as a floor when prices are above it, and we were suspecting within that square that we are going to look at, we were suspecting that the momentum is showing up, turning up. It's still not confirmed on longer term charts, but short term it was indicating the possibility to create this bottom here.
And Bruno, how exactly does it look a month later?
Well, a month later it doesn't look bad. If we just zoom up to the little square that we had before, basically we were here in the 25th of September, and we just had this bottoming phase, which is happening above the previous low. So if we are higher lows, it's the first step to start a new uptrend, given the fact that we had a long downtrend. And as you see, what on these agriculturals, probably it's going to attract attention from the side of the market participants, which are relatively short term, once we are above the 150. But interestingly here, on the weekly, last week we had a so-called reversing engulfing pattern. That means that between the open and the close, you had an open and a close which are beyond the previous week and pointing upwards, right? So that's good news. And therefore, the signal that we get here on this oscillator should be confirmed later on by this long-term oscillator, which is going later on to cut above the plus side.
And are industrial metals confirming the bullish perception on the equities market?
It takes its time. It's not so fast. We do have here two things, right? On the top part, we have the orange line is the line of the all metal index, Dow Jones UBS Metal Index total return, and we are going to look at the copper evolution. We call it Dr. Copper because usually it is an advanced indicator of what's happening in the real world. Namely, when people buy copper, it's because they want to construct something with copper. We had mentioned on the 20th of September here that we had a bottoming phase. A bottoming phase is something where you stopped the progression of lower lows. Okay, that between June and September we are making smaller, higher lows and higher highs, but it still remains below this big horizontal line that we call the 340 pivot line for copper. And even though the momentum is turning up, we would like probably to zoom in the shorter term to see what happened. And here we see that it's really taking its time. You see, we were here on the 27th, we were hoping that it would accelerate through the 340 level, and it did not. It did not. It stays in a small triangle, which is not a bad thing because a small triangle is a continuous pattern. So that means that the pause of the rise is going to be matched by a symmetrical rise here. So there is still the information that the 340 level is going to be broken on the upside. Further, there is one good point, which is the fact that these red lines on the top and lower part are the Bollinger Bands. And these Bollinger Bands are getting narrowed, and there is a chance that once they explode, the explosion will be on the upside.
And in terms of gold as a protection, how do you see it?
Look at what gold has been doing since 2013. From January all the way to July, basically it was a downtrend. And everybody remember that from May on, it accelerated on the downside quite quickly from the 1550 level all the way to 1350 and then made new lows in June, July. Therefore, what's happening here is a rebound in the bear market, and we were at the time relatively cautious by saying you have to really buy very low dips in order not to take too much risk. If you buy at too high level, you might have too much risk compared to what your money manager or your risk manager is going to mention. And we noticed then what is the important line. The important line is written here, 13,000 as a pivot line. And we would like to know what happened right now. Let's look at that right now. We see basically this price of gold from September to October going from 1435 to 1251. And we are very happy to see 1251, at least one day, a very short day, because we had mentioned the proposal to buy at 1255 and with a stop around 1180, which was the previous low. So now we had effectively not a lot of time to buy, but in theory it could have been done, and it broke also the descending trend line, and it moved above 1300. So all of these elements suggesting at least that we are going to move toward 1364 and maybe revisit it sometime, maybe early next year, the 1450 area. So in fact, we get something very nice. We have entered at a nice level. We can rise now our stops from 1190 to 1260. And because we bought at 1255, we almost have a free option.
Bruno, thank you very much.
You're welcome.
Well, that is it for right now, but do stay tuned to Dukascopy TV for more Forex analysis. Goodbye for now.